Welcome to TradeTheMBA.com. This is Jonas. Report is for the 4th of April, and well, the aftermath of, Liberation Day. Yeah, the tariffs and everything that have gone on all the other countries. Market did not react to it well, and simply because it's a bit of uncertainty. Um, they're wrong when it comes to the economics of it, but that's neither here nor there. It is what it is. MBI White still leading the charge here. Magenta well underneath yellow, and of course we had the spike of the orange dip below, just a little bit slow in the recovery, and that's simply because of this previous dip that we had in the shakeout. We knew that we were going to come up. If you didn't get to the positive, then once it started to roll over, which it did early on, you knew where this was headed, back to the zero. We talked about it. Nothing shocking from that. Now, the degree of the move, obviously, for some people, that's shocking, but as you can see, we're just back to the levels that we were right here at the end of 24. Still, relatively speaking, with inflation and everything else, one could argue the valuations are still high. But then again, now they've changed because they're automatically assuming that this is going to lead to global meltdown of, economics, yada, yada. But as you can already see, every country on the list, for the most part, has already started a call to see about making a deal. And those that don't are going to get crucified. And this is where it'll be interesting to see if the European Union decides to fall on its own sword, because they really can't afford to. So they're in an odd position because they're going to need the extra liquidity in that in order to fund their designs for World War III, and you can't get that if you're trading having a trade war as well. This is not going to work. But it's going to impact them dramatically, and they can't really offshoot anywhere else because what are they going to do? Are you going to buy commodities? I mean, you can try and trade for them in euros, but it's not happening. Now, you had this huge spike in the euro, but that's going to be short-lived really quick. When you look at the NASDAQ, the NQ has already been much weaker, but when you look at it back from this relative standpoint, you can see it's still slightly better than the S&P when you go back to that same period in 24. Relatively speaking, so you sort of get a baseline there of, while it seemed like it was a greater decline, it's only because the increase was faster than the S&P was. So we're really kind of returning to an equilibrium point. Not bad. Of course, Treasury's stuck in this no man's zone. The expectation is the Fed might have to ease. Is it going to provide counterparty? And then you get the EU talking about whether or not they can even trust that the Fed will be able to maintain liquidity during any crisis situation. They don't have any other choice. The only reason that the euro is afloat is simply because of the Fed and liquidity. Without it, they're completely gone. This is what the White House really wants to see, and this is powerful because this dip in oil with the expectation of complete decimation of demand, and also the way that oil is distributed, huge impact. And if this continues to accelerate and move down into levels, then you get into a situation where, wow, you've got the ingredients for economic recovery. It's been something I've been talking about for a while because it's the baseline for all things. Here's that euro shoot up, crazy time, but for short covering within that dollar setup. But again, money's still going to be coming back to the dollar because all these people are going to need to invest in plants in the U.S., and that requires dollars. Now, of course, people pull back into their European construct, so that's them pulling their, euros back home during the uncertainty of it. But again, this is not going to last for very long. They're still going to have to use the U.S., particularly once things stabilize to a point where they believe that there's going to be a turnaround. Gold, not really suffering all that much. It's been a big peak with a lot of positive extremes. This sort of satisfied with that dip down here, all the way back to the beginning of the breakout part of it. So that was all good, still holding up. If that oil continues to drop, though, I would expect to see gold take it a little bit harder on that. didn't really damage Bitcoin in any way, shape, or form. I think ETH was having a bit more trouble with this than Bitcoin was in that sense, and that just gives you the relative strength difference between the two. It's very, very stark and clear. But the crypto winter is not over yet. So when we look at it from a 50K, this is pretty exciting. I was expecting our returns back up to the 23%, but every time we got to the 23%, look, there was no momentum. And like I pointed out, you're not going to get any kind of push through without a move of magenta over the 25. And later in the day, when the MBI white led, and then you finally got the magenta rise over it, you got that move up to the 23. But the problem was MBI white spiked immediately after that, and from there, you're going to zero, and that's exactly what we did. 0% has stayed in the lead, and that's why you continue to make new lows. It's classic. Throw in the fact that you had orange between cyan and red continuation. So these are all clean and then very distinct, and pretty much fits within exactly what our expectations for it were. They're going to try to rally in certain points, but that was mostly just short covering. And once they were done and the price was elevated enough, they tried to sell into it quickly. But the problem was there weren't that many buyers, so you ended up fading even quicker than probably they had hoped, because usually they want to consolidate going across for a while and then have it break down. But this was more just quick spot liquidity situations, and it's pretty much a normal, healthy, I think, reaction to everything. Fine, it's happening very quickly, but we always know that markets fall faster than they rise, and it's just a standard precursor, so there wasn't anything particularly interesting about that. Intraday, from our little short time frame, there was your little spurts, then mostly down. And that continued all the way through, and it's still even continuing here in the European session. Let me get all the way to the end. Gotta grab it at the right spot. There we go. So we had the little brief up move, and then we've just retraced all of it back. And again, that white MBI lead pretty much dictates everything on it. Do I expect it to stabilize anytime soon? No, not really. This narrative that they've got going on and the destruction of it, but what are they going to do when various trade deals are made and those tariffs are removed and stuff, but the U.S. gets a better deal? What's going to be their story at that particular point? They're not going to have one, so it's strange stuff. Let them do what they do. All we have to do is follow the readings. That's the most important thing. So all good. As always, anything relevant, I'll put in the Skype chat as long as Skype continues to exist here for another couple weeks and move on to something different. As always, trade well.